Hello dear, I am glad to see you in this video. Here you learn about journal entries and how to create accounts. As you know already that every accounting transaction has a dual effect. This rule you can practically find by posting journal entries in books of accounts. First you learn the basic types of journal entries and their definition. So let us start with the definition of first one, opening entries. Opening entries made to indict the last year balances to new year books of accounts. The balances of the last years transferred to the new year books of account by opening entries. Closing entries, entries made at the end of the accounting period to close the accounts are called closing entries. Adjusting entries, these entries are made at the end of the accounting period to record accrued expenses, prepaid expenses, or any kind of estimates. Compound entries, entries where more than one account to be debited or to be credited are called compound entries. Correcting entries, these type of entries made to correct the accounts which are mistakenly over or understated by posting. Now you learn how to practically entry post in the books of accounts and how T accounts be paid for those entries simultaneously. So let us start with the entry. First entry, it is to record cash sale, cash in hand or bank debited, and sales credit. As you know, asset when increase it will be debit, and income, liability or capital when increases it will be credit. Now switch into second entry to record credit sale. Debtor may be Mr. X, Mr. Y or any kind of company, debited, and sale credit. So let's see on the T accounts for the same entries. In sale account you can see that balance brought down show in credit side of the sale account, while cash and credit sales also show in credit side of the sale account, as sales income having normal their balance in credit, while cash and debtor account will increase by 5,000 and $2,500 for the same value as shown in sale account but in debit side of the account. So let us start with the other entries. Purchases account debit to record credit purchase, and creditor account credit to record liability. If you want to record rent expense will be debit, and if you pay in cash or by bank, cash and bank credit. If you have to record the expense which will not be paid yet, this entry made by rent expense debit and rent payable account credit by the same value. If you paid rent in advance, then rent prepaid or advance debit, and cash or bank will be credited with the same amount. Depreciation expense debit or asset or accumulated depreciation account will be debited for the to record depreciation expense for the year. If you want to record the sales not recovered or bad debt, so you have to debit bad debt expense, and allowances for doubtful debts will be credited. You have some practical material that you have to use to practice to make entries of the accounts in the books of account, and you also make practice with this link. Thank you for this video. We will meet in next video for trial balance. Bye bye.